2022 has been a mess across virtually every asset class globally. Except for a few industries like domestic utilities and a few energy-related commodities like natural gas or lithium, asset class returns have been negative year to date and highly volatile at the same time. Music to the ears of short-term traders, but the worst of both worlds to most longer-term investors. I'm Chris Perras, Chief Investment Officer at Oak Harvest Financial Group, and this is our investment team's midweek release when we examine a news item, headline, or story making the rounds from publicly available sources, and we ask, is it news or is it noise for your money? This week, we talk volatility in the stock markets. Year to date, there's almost no asset class I can find that has escaped a year of high volatility and negative returns. A few that have are dollar currency and domestic utilities and energy-related equities and their commodities. Unfortunately, neither of these categories make up a large portion of the indexes here in the States, so every broad index I track is down year to date. Bond returns are negative with high volatility to boot. Many investors were told that wasn't the way bond markets worked. Well, when yields are falling, that's right. However, year to date, with the Fed raising short-term rates so quickly, real yields have risen over 200 basis points in 10-year treasuries and 425 basis points in 2-year treasuries. And volatility, as measured by the bond market's MOVE index, has skyrocketed. Since September of 2021, the MOVE index has tripled in a year from 50 to 150. But guess what? There's a bit of good news here. It's beginning to decline off its highs. That's good for not only fixed income investors, but also for risk assets if it continues. Here's a chart of the MOVE index, which tracks bond market volatility. The peaking in the MOVE index leads to some more good news that few people are discussing. The news that behind the scenes, volatility is starting to head lower, not higher. Might that reverse? Sure it could, but history says it's unlikely. Remember, way back in November and December of 2021, our investment team warned that the first half to the first 3 quarters of 2022 was likely going to be a volatile, sloppy, choppy mess. Well now, this is the chart of forward volatility out through year-end 2022. What's it saying? Now it's saying quite the opposite it was saying at the end of last year. This is a continuous contract chart 5 months forward. So this is how you read this chart. Back in the fourth quarter of 2021, it cost you about 23 to hedge through mid-year 2022. Back in March of this year, when markets were headed straight down to start the year, it cost you almost 30 to 31 to hedge or buy insurance for the next forward 5 months out into August. That's close to 40% more than only a few months earlier. However, as of now, stock volatility peaked on June 14th through 16th, right as stocks troughed. If this was a stock, chartists would be saying this is a triple top or an obvious head and shoulders top. And now it's broken an almost 9-month uptrend. It now appears that higher moves in volatility look to be sold. That would be opposite of November 2021 through mid-2022 summer, where pullbacks in volatility were bought and rips higher in stocks were sold. Historically, this trend reversal in forward stock volatility has led to big money managers buying dips in stocks, not selling rips. Peaking stock market volatility behind the scenes? Viewers, this would be huge news. News few in the investment community are seeing. Just as few were discussing the coming volatility for the first half of 2022, way back in the fourth quarter of 2021. At Oak Harvest, we think our clients are best served by us helping them plan for their future needs instead of focusing on the past. The future is always uncertain, and that's why our advisors and retirement planning teams plan for your retirement needs first and your greed second. Give us a call here to speak to an advisor and let us help you craft a financial plan that helps you meet your retirement goals. Call us here in Houston at 877-896-0040 and schedule an advisor consultation. The first one is free. We're here to help you on your financial journey into and through your retirement years. I'm Chris Perras, and for the whole team here at Oak Harvest, have a blessed week.